Hello and welcome everyone to Real Estate Savvy here on Northwest Digital News. We've got some great content for you today on home loans and some of the top types of home loans. Kevin Hunter, Susan Wood, and Kyle Torgerson at the broadcast desk today. So let's start, Susan, with conventional loans. 73.8% of new home sales in the first quarter of 2018. They have a lion's share of the loans.
Yes, they do.
So
Yes, they
tell
do.
us about conventional loans and your experiences with them.
That's a broad subject. Conventional loans is what is used most broadly across, wherever. It's a 620 credit score. So for most Americans, we all qualify for that.
Mm-hmm.
It is not as forgiving for needing money down, though. So conventional loans require more money down than most. So, you can do 3 to 20%. Anything less than 20%, you're going to pay PMI,
Mm-hmm.
which is a mortgage insurance. And then after it reaches a 22% increase on your home, which require an appraisal,
Mm-hmm.
then that PMI falls off.
No, with conventional loans maintaining a really high percentage of the home loans, and that's actually been an ongoing statistic for some time. Is there anything that you would point to as to why conventional loans are kind of holding the banner?
I just think they have a better interest rate than
Gotcha.
typically most loans. So your FHA or VA are going to be slightly higher interest rates,
Mm-hmm.
and your conventional is going to be lower. And the better your credit score, the more that's going to reflect.
Gotcha.
Yeah.
So just like any other type of financing,
Yes,
better credit scores get better rates.
That's
It's
right.
kind of across the board.
that's right.
All right, let's visit about FHA loans. These are a very common loan type as well. They are the second place lender
Yes, they are.
in the United States, but hold 12%. That was actually in first quarter 2018. Talk about FHA loans.
I think the FHA has come up because we all know the market that had crashed. And so people's credit kind of went downhill.
Mm-hmm.
And it is the most forgiving for bad credit. I think your minimum has to be 580. And retrospectively speaking, most of us are born with a 580, or we hope to be, credit score. You have to either not have any credit or very bad credit in order not to be a 580.
I've
So
seen
just more
credit scores
forgiving.
that were zero.
I know,
Like
isn't
somebody
that
didn't even
amazing?
have one established.
Yeah.
Yeah.
They pay everything for cash.
Mm-hmm.
Never have a cell phone, never do anything that has to do with credit whatsoever. If they can't pay cash, then they're not going to buy.
And you know what's interesting is sometimes these have been people later in life who are exactly like that, like you just said, and love to pay cash and say, well, I've always paid cash and I've got plenty of cash on hand and everything else. And it's like, did you know you have no credit score?
Well, they don't care.
It's like, it doesn't matter.
Right.
So FHA tends to favor that lower credit score crowd.
It does. It does. Or the first time home buyer crowd. The thing with FHA compared to conventional is that when you put less than 20% down, you have PMI forever until
Right.
the loan, either you refinance that loan or you pay off the loan.
Mm-hmm.
So with PMI, it's going to run you approximately, well, it depends, but about $200 additional a month.
Which is mortgage insurance.
That's right.
Yes.
And if you already have a $600 or $800 mortgage payment and you add $200 to it, it gets a little more steeper.
Mm-hmm. Well, there's also VA loans, and VA loans had 8.7% of the market. We're starting to get down to the nitty gritty because when you start thinking about like all the different lenders that are out there and you go, okay, so conventional has almost 74%. The FHA loans have 12%. We're talking about VA loans at 8.7. It doesn't leave a really big crowd after this. Talk about the VA loans.
So VA loans are for veterans, as it explains, or spouses who have had veterans who died in service. So I think their credit score has to be about a 620. As long as you're a veteran, you can buy a VA loan or get a VA loan on a home, and it allows you to go in theoretically most of the time with no money down, but sometimes they do require more money down, up to 3.5%, from 1.5% to 3.5%. So it does allow those people that don't have still a lot of money to purchase a home. And then I believe the VA also will pay a lot of your closing costs. So you theoretically are walking in only with your down payment because they will pick up the rest of the tab. So that saves you about $7,000.
I just pulled this off of the veteran site, and just for some specifics for our viewing audience, it says if you have 90 consecutive days of active service during wartime, you could qualify. If you have 181 days of active service during peacetime, if you have more than 6 years of service in the National Guard or the Reserves, or you're a spouse of a service member who died in the line of duty as a result of a service-related disability, you could also qualify. So those are kind of the benchmarks of whether a VA loan is for you or not.
Right. Absolutely.
This leaves us just with a small group of loans that are out there, so I'm going to pick on just a couple of them. The remaining chunk of borrowers, so there's like 30 some different loan types, aren't
32.
there? 32.
Yeah.
Okay. So in the remaining group, the 5% group, which includes cash buyers too, by the way.
Right.
Yes. So in this remaining group are loan types under USDA.
Yeah.
So talk about USDA. They're kind of specific to more rural areas, aren't they?
Exactly. So there's a website, if you're looking and you qualify for USDA, the requirements of USDA are the same as FHA or VA as far as credit score goes.
Okay.
Or the type of
lower credit scores than a conventional loan.
Right.
Okay.
And so it will allow you to buy more rural properties at a better interest rate. And so if you're looking to buy, or if you qualify for FHA, generally you will qualify for USDA.
Okay.
And you just ask your lender to check to see if they do USDA. Not all lenders do USDA. And then if they do, in fact, and they say, yeah, you qualify for FHA or USDA or conventional, because sometimes you qualify for all, it just depends on the property. Your best bet is actually to use your USDA, because you're going to get in for less than nothing down almost. It's hardly anything that you're going to put down, if anything at all. And then you go to the USDA eligibility map and you type in the address, and it'll tell you whether or not it's located in the area or not. And it changes every year, so you can't count on it always being in a certain area. You actually have to go to the map to make sure it qualifies. And then it does take a little bit longer to close. Typically speaking, when you're dealing with USDA, then it has to, once a loan processes, it has to go to the state, and it has to be cleared through the state. And the state will then kick back and say, okay, absolutely, this qualifies for every portion of USDA, and then their funding kicks in. And that's actually what puts your down payment down.
So we're talking about, in these first four, we're talking about essentially 95+% or more of all the lenders that are dealing with home loans. And so these loan types, as a general rule of thumb, are available through local lenders, correct?
That's right.
Okay. So what if somebody decides to do some lending outside the area, or even with online lenders? Are there any that you recommend?
I've had great luck with Quicken Loans, actually.
Okay.
So they've really stepped up the game. They used to be known as a payday loan expert or something like that. They really have decided to take a little better approach towards working with those different types of loans that now we are using. So they've moved from doing payday loans, I believe, I don't think they do that anymore, and have really stepped up the game and become a great competitor locally, or I believe even internationally, with people trying to find a home loan. They close loans quickly, and gosh, far less headaches than some of even our local lenders, unfortunately, or local banks.
So you gave some brackets of credit scores that people should be shooting for these various loans. Is there anything that, if somebody just came up to you and generically said, where do I need to be to consider a home, what recommendation do you give them?
Well, first is always check with the lender. I think we discussed this once before. If you check with the lender, they'll tell you, one, if your credit is where it needs to be, and two, if you need to bring money in, what type of loan you qualify for. So always check with the lender first. And I really think staying with a local lender is probably the best route. They are very familiar with the area, the types of homes, and what's required for our area to, or even your area, wherever you're located, to be qualified, because not all areas are the same, and there are certain requirements that each area in each state have that other states don't. So when you shop outside of your state or your local area, sometimes it's a little more difficult to close those loans.
Well, for somebody who's looking at buying a home, and maybe they have this DIY mentality, I like to do my own thing, and so they go out and pull their own credit prior to all of this. Is that even helpful to the process at all?
No.
Not at all.
Now, even when people say, well, I pulled my credit and it only cost me $9.99, now I know I need to do, you don't know what you need to do. Because what a lender's going to ask you to do is generally not what you think they're going to ask you to do. So if your intent is to truly buy a home,
go talk to a lender.
Go talk to a lender.
Yes.
And preferably a local lender to your area. And it can be your local bank. Typically speaking, a credit union is, if you're going to use a bank, a credit union is better to use.
Now, so somebody should do that, even if they're planning on using an online lender or something like that. They should still start with a local lender and see where they sit.
Oh, absolutely. You don't want to waste anybody's time, you know, because it is time consuming to pull your credit and to make sure that you are exactly where you want to be. And oftentimes a local lender will fight for your business. If you go and said, well, I had somebody who offered me whatever the percentage is, they can see what they can do to buy that down for you. So don't just take it at face value as, well, this is what they said. Let them know what they're up against and see if they can help you or compete.
Well, I hope everybody has taken good notes in this segment on Real Estate Savvy. A lot of great information about some of the top loans. We covered, of course, conventional loans, FHA, VA, and USDA. And interestingly enough, these 4 loans encompass 95% of all loans done in the home lending market. Consider looking there first before you go elsewhere. I'm Kevin Hunter with Susan Wood and Kyle Torgerson here on Northwest Digital News. Thanks for joining us on this segment of Real Estate Savvy. Special thank you to everybody on Twitch TV, YouTube, Patreon, and Facebook who joined us here today. Till next time, take care.